The Federal Reserve. Just the name alone sounds like something out of a spy novel, doesn't it? It's a phrase you hear on the news, in movies, and in conversations about the economy. But what is it really? Is it a bank, a government agency, or something even more mysterious? Most people know it's important, but few can actually explain what it does or why it matters. The name conjures images of eagles soaring over marble buildings and money being printed with high-tech lasers in secret vaults. It feels like the beating heart of America's financial system, pulsing with power and intrigue. But here's the truth. While most people have heard of the Federal Reserve, almost nobody really understands what it does. It's a mystery that even the most financially savvy sometimes struggle to unravel. Think of it like that one relative at Thanksgiving dinner. Everyone knows his name, but when you try to explain what he actually does for a living, things get awkward. You nod, you smile, but deep down, you're not quite sure. The Federal Reserve is a bit like the Wizard of Oz. Instead of hiding behind a green curtain, it hides behind a wall of economic jargon, technical reports, and complicated theories that make most people's eyes glaze over. It's powerful but also elusive. This shadowy organization quietly shapes the economy, influencing everything from the value of your paycheck to the price of groceries. Whether you realize it or not, the Fed's decisions ripple through your life in ways you might never expect. So buckle up, because we're about to pull back the velvet curtain and shine a light on the secrets of the Federal Reserve. We'll explore how it works, why it matters, and how its choices affect you every single day. Let's start simple. Think about that morning latte you bought on your way to work. The price you paid, the way you paid for it, even the job that lets you afford it, all are touched by the Fed's invisible hand. Or consider the interest rate on your student loans, your mortgage, or your credit card. Those numbers aren't random. They're shaped by decisions made in secretive boardrooms by people you'll probably never meet. That's right, the Federal Reserve has a hand in both your daily caffeine fix and the long-term debt you carry. Its influence stretches from Wall Street to Main Street, from billion-dollar banks to your local coffee shop. Still scratching your head? Don't worry, you're in good company. Even experts sometimes struggle to explain the Fed's inner workings. The confusion isn't accidental, it's almost by design. And that's exactly how the money masters like it. The more mysterious the Fed remains, the more power it quietly holds over our lives. But today, we're going to change that. Okay, let's cut through the cryptic crap. If you've ever wondered why your money seems to stretch less every year, or why interest rates suddenly spike on your credit card, you're not alone. The world of finance can feel like a maze designed to keep regular people out. But at the center of it all, pulling the strings, is an institution you might have heard of, but probably don't fully understand. The Federal Reserve, or Fed for short, is America's central bank. It's not just another government agency, it's the powerhouse that quietly shapes the financial landscape of the entire country. Most people never set foot inside, but its decisions ripple out to every corner of your life. Think of it like the bank for all the other banks. When your local bank needs money, it turns to the Fed. When the government needs to borrow billions, the Fed is involved. It's the ultimate lender, the referee, and sometimes the rule maker. The Fed doesn't just sit on a pile of cash. It actively manages how much money is circulating in the economy. By buying or selling government securities, it can pump money in or pull it out, trying to keep things balanced. It controls the money supply, sets interest rates, and basically dictates the flow of money throughout the entire U.S. economy. When the Fed tweaks these levers, it can make borrowing cheaper or more expensive, encourage spending or saving, and even try to prevent recessions. What does that mean for you? Well, remember that latte? The price you pay at your favorite cafe is influenced by the Fed's decisions, even if it doesn't seem obvious at first glance. The Fed's policies influence inflation, which affects the price of everything from coffee to cars. When inflation rises, your paycheck doesn't go as far, and everyday essentials start to feel like luxury items. The Fed tries to keep inflation in check, but it's a delicate balancing act. Whether you're budgeting for groceries, saving for a new car, or just trying to keep up with rent, the Fed's choices play a role in how much things cost and how far your money goes. And those student loans? The Fed sets the benchmark interest rates that banks use to determine how much you pay back. If the Fed raises rates, your monthly payments could go up, making it harder to get ahead. Mortgages, car loans, credit cards, even business loans, all are tied to the rates the Fed sets. A single decision in a boardroom can mean thousands of dollars more or less for you over the years. But it's not just about lattes and loans. The Fed's decisions impact everything from job creation to the stock market. When it makes borrowing easier, businesses can expand and hire more people. When it tightens things up, companies might cut back. When the Fed sneezes, the entire economy catches a cold. Investors watch its every move, and a single announcement can send markets soaring or crashing. So yeah, it's kind of a big deal. The next time you wonder why your wallet feels lighter, remember, the Fed's rules are shaping your financial reality, whether you realize it or not. Here's where things get really interesting. And by interesting, I mean potentially terrifying. The Fed isn't your typical government agency. It's a weird hybrid, a Frankenstein's monster of public and private interests. It was created by Congress, but it operates with a surprising degree of independence. Imagine a group of unelected bankers meeting in secret, making decisions that affect the lives of millions. That's the Fed, folks. They operate in a world of hushed boardrooms and confidential memos, far removed from the scrutiny of public opinion. This lack of transparency has led to plenty of conspiracy theories, some more outlandish than others. But one thing's for sure, the Fed's inner workings are shrouded in secrecy, which makes it difficult to hold them accountable for their actions. Let's talk about the Fed's most powerful tool: interest rates. Think of it like a giant economic thermostat. When they want to stimulate the economy, think encourage borrowing and spending, they lower interest rates, making it cheaper for businesses and consumers to borrow money. But when inflation rears its ugly head, think prices going up, up, the Fed raises interest rates, making it more expensive to borrow money and hopefully slowing down spending. It's a delicate balancing act, and getting it wrong can have disastrous consequences. Remember the 2008 financial crisis? Yeah, some argue that the Fed's loose monetary policy played a role in inflating the housing bubble that led to the crash. See? Told you it was powerful stuff. Here's another mind-blowing fact. The Fed can literally create money out of thin air. No, seriously, it's called quantitative easing, and it's basically like giving the economy a massive blood transfusion of freshly printed cash. This can be helpful in times of crisis, like during the COVID-19 pandemic when the Fed injected trillions of dollars into the financial system to prevent a complete meltdown. But critics argue that printing too much money can lead to inflation, devaluing the currency, and eroding people's savings. It's a bit of a double-edged sword, a powerful tool that can be used for good or evil, depending on who's wielding it. So how did this shadowy organization come to be? Well, it all started back in 1913, after a series of financial panics rocked the U.S. economy. The government decided it needed a way to stabilize the financial system and prevent future crises. Enter the Federal Reserve Act. This act established the Federal Reserve System, a network of 12 regional banks overseen by a board of governors appointed by the president. The goal was to create a more stable and flexible currency, but it also concentrated a tremendous amount of power in the hands of a select few. Some argue that the Fed has been a force for good, helping to steer the economy through turbulent times. Others believe it's an unaccountable behemoth that benefits the wealthy at the expense of everyone else. The Federal Reserve, or the Fed as it's often called, is a bit like that friend who's always there to bail you out of jail when things go sideways. You know the type, reliable, resourceful, and always showing up just in the nick of time. But, just like with that friend, you can't help but wonder, where do they get all that money? How do they always seem to have a solution, no matter how big the problem? It's almost as if they have a secret stash, a never-ending supply of cash that appears out of thin air. The Fed's ability to inject money into the economy can seem mysterious, even magical, to those on the outside looking in. Sometimes it makes you wonder if they're secretly running a counterfeiting ring in their grandma's basement, printing up dollars whenever the mood strikes. Of course, that's not exactly how it works, but the reality is almost as strange. The real question is, when the Fed steps in to help, are they actually doing you a favor, or are they just creating a cycle of dependency? Is their help a lifeline, or does it come with invisible strings attached, making it harder for the economy to stand on its own 2 feet in the long run? Supporters of the Fed argue that it plays a vital role in maintaining economic stability. They say the Fed is like a skilled pilot, steering the economy through turbulent skies, preventing runaway inflation, and stepping in to mitigate financial crises before they spiral out of control. Without the Fed, they claim, the economy would be far more volatile and unpredictable. These supporters often point to the Fed's actions during the 2008 financial crisis, when it took unprecedented steps to stabilize the banking system and restore confidence in the markets. By slashing interest rates and providing emergency loans, the Fed helped prevent a complete economic collapse. More recently, during the COVID-19 pandemic, the Fed acted quickly to inject trillions of dollars into the economy, supporting businesses, families, and financial institutions during an unprecedented global shutdown. For many, these actions are proof that the Fed is an essential safety net in times of crisis. But not everyone sees the Fed as a hero. Critics argue that the Fed's policies often end up benefiting Wall Street and the wealthy elite rather than ordinary Americans. They claim that easy money and low interest rates inflate asset prices, making the rich even richer while leaving Main Street behind. Meanwhile, small business owners, working families, and everyday people often feel left out, struggling to keep up as the cost of living rises and wages stagnate. For them, the Fed's actions can seem distant, disconnected, and even harmful. Critics point to the fact that during the 2008 crisis, the Fed bailed out big banks and financial institutions, those deemed too big to fail, while ordinary Americans were left to pick up the pieces. The image of bankers celebrating while the rest of the country suffered still lingers in the minds of many. As millions of Americans lost their homes, jobs, and savings, the question remains, is the Fed truly a savior, or is it a villain in disguise, propping up the powerful while leaving the vulnerable behind? Love it or hate it, the Federal Reserve is a powerful force to be reckoned with. They're the undisputed champions of money, the puppet masters pulling the strings of the global economy. And they do it all from behind closed doors with very little accountability. So the next time you hear someone mention the Fed, don't just nod along pretending like you understand what they're talking about. Take the time to learn about this enigmatic institution and its impact on your life. Because whether you realize it or not, the Fed is shaping your financial future. The Federal Reserve is a complex and often misunderstood institution. It wields immense power over the economy, and its decisions have far-reaching consequences for everyone. Whether you agree with its policies or not, understanding the Fed is crucial for anyone who wants to navigate the complexities of the modern financial world. So stay informed, ask questions, and don't be afraid to challenge the status quo. After all, the future of our economy, and by extension our lives, may depend on it.